And if we are to scrutinize further the definition, class, the definition does not even have to tell us, class, that a land or building that is used in the production or supply of goods or services or for administrative purposes is not covered by past 40, is not an investment property, because we already know that that would be considered as an item of property, plant, and equipment. Okay, and for letter B here, class, if it is held for sale in the ordinary course of business, we already know that that is considered to be an inventory and therefore governed by past 2. Okay. A new concept that we will encounter in past 40 class is the concept of owner-occupied property. So owner-occupied property is property held by the owner or by the lessee as a right-of-use asset for use in the production or supply of goods or services or for administrative purposes. From this definition, class, we are able to say that owner-occupied property, as an opposite to investment property, will be classified as your property, plant, and equipment. Okay, so if you match the definition provided in owner-occupied property with the definition provided for property, plant, and equipment class, you'll be able to correctly conclude that owner-occupied property is to be reported as property, plant, and equipment. In other words, owner-occupied property will be governed by past 16. Okay. I'd also like to emphasize, class, because of the use of the owner-occupied property class, because of the use of the term owner-occupied property, there is now a confusion as to the treatment of vacant properties, class. Okay, so really, investment property and owner-occupied property could be two sides of the same coin lang. The same land or building, which could either be investment property or owner-occupied property. If it's an investment property, class, meaning it's held for rental, so it will not be the owner that will be occupying the property. And if it's held for capital appreciation, class, the common understanding there is that no one is occupying the property at all. If it's held for rental, somebody else is occupying. If it's held for capital appreciation, nobody is occupying. And that is the logic behind the use of the term owner-occupied property. It is now the owner that is using the asset for production or supply of goods or services or for administrative purposes. Okay. We need not focus so much, class, on the use of the term owner-occupied. Just understand that it will be past 16 that will govern if it is considered as an owner-occupied property. In problems, class, even for theory multiple choice questions, it's a common theme that you would be asked to identify which of the following items is an owner-occupied property, which of the following items is an investment property. For problems, you will just be given an enumeration, class, a listing of assets, and you will just be asked to add items that are going to be considered as investment property, items that are going to be considered as owner-occupied property. Okay, so it's important that you are familiar with the definition of both investment property and owner-occupied property, because that could be the principal issue in a lot of questions involving past 40 class. Okay, so if you're asked which of the following is not an investment property, and you're given with a machinery as among the choices, class, then that should not be difficult already for you to answer, because you know that investment property is limited only to land or building. There are, although there were issues, class, that arose from this definition, class. For example, cell towers, class. There are those who own radio towers or cell sites, class, okay, and they lease it to those who are engaged in telecommunications. So the question now is, how are you going to classify that cell tower, radio tower? Okay, and based on an interpretations, class, based on the interpretations committee, class, since those kind of structures class do not uh, have the same features that are commonly attributable to a building class. They do not have walls, they do not have doors, then they will not be considered as an investment property. They are treated as part of your PPE. Please take note of that class, just in case that would be asked. Okay, cell sites, radio towers, billboards class, because they lack the features that are common for your buildings class, they are not considered as an investment property. So, to further help our understanding class, paragraph 7 tells us that an investment property generates cash flows largely independent of the other assets held by an entity. So, to distinguish it from owner-occupied class, for those assets that are used in production or used in the supply of goods or services, your owner-occupied property is able to generate cash class, is able to generate money through the use also of other assets. But for investment property class, on their own, they are able to provide you with cash. They are able to provide you with increase in value. Okay. Now, paragraph 8 class and paragraph 9 would be the primary source of the question I told you earlier, wherein you would be asked which of the following is an investment property, which of the following is not an investment property. So, paragraph 8 gives us examples of investment property, while paragraph 9 gives us examples of those that are not considered within the scope of PAS 40. Those that are considered not investment property. So, paragraph 8 first. Letter A, land held for long-term capital appreciation. Understandable because that satisfies the definitions of investment property. Okay. Rather than short-term sale in the ordinary course of business. Letter B class, land held for currently undetermined future use. Okay. This would be considered as an investment property class even though there is no intention yet on your part, even if you have not yet committed to use it for an investment property purposes, if you have not yet determined the use for the asset class, it would still be considered as an investment property. Why? Because even if you do nothing to that land class, it would still increase in value. So there is now a presumption that it is being held for capital appreciation. Even if you have now specific plans yet as to this particular land, okay, that would already be considered as an investment property because there is an assumption that that is being held for capital appreciation. Regardless of whether or not you do anything to it class, the value of a land will tend to appreciate over time. Letter C, a building owned by the entity and leased out under one or more operating leases. At this point, class, maybe it's not good if I give you a brief distinction between operating lease and a finance lease class. Operating lease class is the usual way of the common way of rent that we know of class. You make use of somebody else's property and you make regular payments. Okay, that kind of arrangement, the usual leasing arrangement class, is what we refer to as your operating lease. The second kind of lease class is your finance lease. Okay, it's in reality class an attempt to sell the asset already, but it is being presented in a way that it appears to be a lease. Okay, and in most cases, the lease payments in a finance lease class would be significantly larger class, because in reality, the payments that are being made here class are not just for rentals but also for the acquisition of the asset. You are both paying rent and installment payments to acquire the asset. So it's being labeled as a lease class, but in reality, it is already a form of acquisition or purchase of the asset class. Although it is not exactly the same as rent-to-own class, but it exhibits the same features class. You're basically buying it already and you're paying rent as you are trying to slowly pay the in the full price of the asset. Okay, so if you are holding the asset class, if you're leasing out the asset in an operating lease, then that asset would be your investment property because you're holding it for rental to others. But if you are the owner class and you are leasing it under a finance lease agreement, in reality, from the perspective of accounting class, you will not be considered as the owner anymore class, and the transaction will not be treated as a lease, but instead it will be treated as a sale transaction class. So since you are now selling it class, since from the perspective of accounting you are not just leasing it, then a property that is being held in a that is being leased out under a finance lease class will not be considered as an investment property. Because if it's in a type of a finance lease, it's as if you are no longer the owner of the property. We'll try to polish more on our understanding of leases when we discuss PFRS 16. But for now, I just want you to understand the common kind of lease that we are aware of class is what we refer to in accounting as your operating lease. So if you have assets that you lease out under operating lease, then that is exactly what investment property is all about. But to understand the other side class, I want you to be aware of the existence of an arrangement referred to as a finance lease. If you have an asset that you are leasing out under a finance lease, you are not really just leasing out your property, you are actually selling it already. And since you are already selling it class, then the purpose for which you are holding the asset is no longer for earning rental or capital appreciation. There will now be a separate treatment as to an asset that is being leased out under a finance lease.